All right, good evening and hello. So we're going to be covering the daily market review for the ES, which is the US 500. So starting from, I'll just leave all of this off and we'll discuss the higher time frame John liquidity, how we got our higher time frame Joe. All right. So as we noted from the previous video on Monday, Pfizer has already taken out buy side liquidity and seeking sell side liquidity. So until proving otherwise, we are going to be sticking to lower prices, meaning we'll be targeting the previous day's low and imbalances below the market place. Now, zooming in, as you can see from this leg, from this leg up, this from this buy program, we are looking for imbalances and expecting price to deliver sell side, meaning we are looking for buy side imbalance that is lacking in sell side, where we have sell side being inefficient. So we have a BC, which is a buy side imbalance, sell side inefficiency, meaning we'll be seeking to deliver sell side delivery to this BC, making this a balanced price range. So for this BC to be balanced, it has to deliver sell side delivery because we've already had buy side delivery, meaning a delivery to the to the upside here, and it is lacking in sell side delivery, meaning going into today's trading, which is Thursday, 13th of March, we are seeking this imbalance to be rebalanced. So hence that was our drawn liquidity going into the morning session. So back with the lipstick. So we just dive right straight into it to the time frame we used. So on the 3 minutes, now we've understood that that daily BC we just indicated it's our drawn liquidity. If possible, I would employ you to turn on your chart if you have the luxury of using another device to mark out to display your chart and another device to watch this current video. All right. So now going into this trading, this was the leg we traded, seeking price to come for this imbalance here. This daily BC high, the midpoint of the daily BC, which is the consequent encroachment, and the daily BC low. And but remember, we do not necessarily need price to come to our joint liquidity for us to be profitable. Like I always reiterate. Now we have this sell side liquidity. You have relative equals here, and you also have this sell side liquidity, which is the low from London. Now, having these lows here, these are points for you to take partials or likely, as I did here, full 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 profit because so let's get right into it. Now, this is one of the reasons why I said you should open your chart and work with me if you have the luxury of having your chart open while you watch this video. But if you do not, it is all good. You can revisit this at a later time. So at 9 a.m., we rallied higher, taking out this buy side liquidity and also this buy side liquidity. So we had price rally higher here for this buy side liquidity resting above these relative equal highs. These highs here are relative equal, meaning we would have buy side liquidity resting above it. Now, the idea going into today's trading is trading internal range liquidity and distributing it to external range liquidity. Meaning, when you have this mindset going into a body of price action, you you leave little expectation for price to come for highs like this to take out extreme highs on the external range liquidity. So when this high was taken, it was not fully established that this was the high here currently for this 1 hour interval from 9 a.m. till 10 a.m. interval. It has not been currently established yet at 9 a.m. when price rallied higher to take out this buy side liquidity. Then we had this consolidation leg, and then price made a failure swing. At this particular point in time, let me take this. This here is our stop placement. This was our invalidation point for stop placement. So our stop was placed above this liquidity pool. Now, as I was saying earlier, when this rally happened, this swing high, this is a failure swing. Price failing to take out this buy side liquidity. Now on the sister indices, which is the US 100 and the US 30, we noticed that this swing was taken. This high here, it was taken, making a higher high on both of the other sister indices, which is the Dow and the Nasdaq. Nasdaq and the Dow traded higher, making a higher high, but the S&P, which is this US 500, failed to take out this its high, meaning we have an SMT formation there. Now, when you have an SMT formation and you have your asset class failing to, sorry, you have one of the three indices. In this case, we're using the indices. When you have one of the indices failing to take out its previous recently created high, this is the algorithm signifying to you that we are in fact bearish on that particular asset class, and that means the market that failed to take out its previous high, that had a failure swing, to be the one to trade lower. Does that make sense? Compared to the US, they will all trade lower, but the US will be lethargic and unwilling to go lower as compared to the S&P, which is this US 500. Now, let's zoom in. So we discuss the inner working. Now remember, we have our joint liquidity, the daily BC we indicated from the beginning of this video, and we also have this liquidity pool and also this liquidity pool. So for a high probability trade objective slash setup, you'd want to have at least 2 points of partials, 2 points of where you should expect to take partials. Having that, it will give you a higher likelihood of profitability for if and when the trade goes against you, because partial trades are perfect trades. So it is advisable in the beginning of your journey to always take partials. Now back to the inner workings. So when this SMT was created, this was our first confirmation. So price then dropped lower. This SMT occurred before the 9:30 equities open, but it is currently above the 8:30 opening. The open of this candle, when you draw this out in time, this is the 8:30 open, meaning we are currently above it, the 8:30 opening, and also we are also above the midnight opening price. So we've gotten three confirmations. So the more confirmation, the more solidified your trade idea is, then you go into the trade looking for entry criteria. Now, after this high was made, we went into a consolidation. Then we had this failure swing. Then price dropped lower. When this drop happened lower at 9:30 a.m., so we had this energetic drop lower, signifying to us that price is in fact seeking this liquidity pool, this relative equal lows, and also these lows. So when price dropped lower, we had this other block. Yeah, this was our first confirmation for an entry criteria, but I missed this other block because I was paying attention to imbalances. I My entry criteria for entering a trade is mostly imbalances and then sometimes other blocks, but it is predominantly imbalances and weeks are imbalances. So now, when price dropped lower, price created this imbalance here, this week at this candle, at this 9:33 a.m. candle, a wick was created, a premium wick was created, and also at the 9:36 a.m. candle, another wick was created. When you have two closely related wicks like this, at the next candle's opening, you indicate this the midpoint of this and the midpoint of this wick as a gray pool. You look for the midpoint of it and you look for the midpoint of the second long extended wick and you draw that out in time. That is a gray pool. This is what I'm indicating here. The high of this and the low of this. So the two imbalances from the two weeks will make a single PDRA, which is the ICT gray pool. So our we placed our entry criteria at the low of the gray pool, our stop loss at the high of the SMT, seeking price to go for lower prices. So we had that here. So when price the next candle we traded inside of the gray pool with a wick. Then price dropped lower sharply and then opened also at the next candle. And at the next candle, we also have a wick going higher, rallying higher to trade above the 9:30 opening price. Meaning, from the concept of power of three, we understand that price always goes above a true opening price to pair up smart money sell orders when we're expecting lower prices. So this price going above this 9:30 opening, it is allowed, especially as it is going up just with the week, because we do not want to see body closes above this ICT gray pool. Like as you can see here, I didn't participate in this. This was what, so placing your sell orders at 5,589.7, your stop loss at 5,595.1. That is about six handles. So our stop loss was about six handles, and the trade was partial, a full pull trade. So taking selling from the low of the gray pool, placing our stop loss at this SMT. Yeah, this is not just a random stop loss placement. We already have multiple confirmations and significant points indicating that we do not want to see price trade above here, because you can see we have this other block which is a PDRA. You have this rejection block here which is a PDRA, because price going above here is rejecting here. So when you have this and you have this SMT making it three PDRAs, you do not want to see price violate three PDRAs of yours, or else that is the algorithm telling you that you are offside. So we entered from the low of this gray pool and our take profit was at this relative equal lows here. We don't need price to come to this low and also to our John liquidity, which is the daily BC highs and the daily BC lows. We do not need price to come to those levels for us to be profitable. We just need a one one ratio three risk to reward model for us to bank something and go about our day. So in total, this trade elapsed about 10 minutes. Sorry, 12 minutes. That was what was recorded. So if you, from our entry position, yeah, to our take profit, yeah, correct. So the trade duration was about 12 minutes. Selling from this gray pool, covering at this relative equal lows here. We still have John liquidities and the ability for price to go for that relative equal lows, and also the daily BC highs and low, which it did at a later time in price, but we were not involved in this. So we're not going to speak on what we're not involved in currently. And also, as you can see, during the during the AM session still, during the AM session still, after 10 a.m., price rallied again into the grey pool. If you look carefully, you can see. So as I was saying, as you can see, during the 10 a.m. to 11 a.m. trading window, price after taking out our Sellside liquidity, price rallied once more again. And if you pay attention closely, you would see the bodies of the candles respecting the grey pool, the high and the low of the grey pool. Price is failing to trade outside of that trading this trading range. The wicks do the damage, the body tells you the story. So if I would have taken out partials here and left something running with my stop loss here, or trade stops move to break even, this trade would have been cut off. So most times it is better for you to just follow your rules and stick to a well written out process. So hope you got something from this video. I'll talk to you tomorrow. Have a nice day and good luck, good trading.